And see, this is January. Today is January 7th. If I'm not mistaken. January 7th. So just daily analysis. So those are volatility 10 index on synthetics. So we've been on a downtrend for so long, and supply zones will work the most. So here was liquidity that was taken here. Excuse me. So here was used as liquidity because there are still some other, there were some gaps around here, places the market needs to fill, and the market came into the other block. And what the market did, market came into the other block, collected liquidity around here, You can see collected liquidity around here. And what the market started going to the downside. Although we've not really formed a major structure because this is the last low, right? That pushed the market upside. But you should know that lower time frames, higher time frames is just multiple actions on the lower time frame. You get me? So what will happen on the higher time frame has already been forming on the lower time frame. You get? So now mainly looking at it, we can see that market, because if you go to lower time frame, you see something like this. But I can't start explaining why I marked this place, but yeah, so we can see something like this. So definitely, if you go to use our line chart, we can see liquidity taking out all the market. The market came from here, from a high, a low, a high. Market was already breaking what internal. Market first did this, collected liquidity grab around there. Internal range liquidity collected. Inducement. This was the inducement. Internal range liquidity collected. And what the market broke this low. And what the market did, came up again. Then what did this candle do? This one came. Internal range liquidity has collected liquidity. So there are two types of liquidity: internal range liquidity and external liquidity. So most of the time, the market does not have the strength to come back to this place, to this other block that is here, and then do something as well. So once market collected internal liquidity, what was, what do you do? Market broke structure, so the downside. So I'm expecting market to come to this other block because look at this thing. You can see that market did not collect internal range, so market is just building building liquidity around there. So market came down. So I expect market to soar up and tap into the other block, and then wait for a confirmation on the lower time frame, a confirmation, market structure shift on lower time frame, and then target here as my first entry. Then obviously, this is a swing. Market has been going down. So imagine if you ride this market from here down to here. So it will be a sweet trade. So all you just have to be doing is all this type of trade. By the time you take a very good entry from here, all this type of trade are always sweet trades. By the time you take a very good entry from here, once take a very good entry from here and put your take profit. Enter like two positions here, put your take profit here. Then once market is doing breaking structure, you just keep on entering, be adding more positions, But obviously, you know that market will not just move like this. Sometimes market will come and do some kind of obstruction, come and take out liquidity before moving again. So you just have to know when you keep entering and ride the market down until this particular level here. So that is what I'm expecting to do on volatility. Then that's what I want to do on volatility. So if you are seeing this video, you should kind of be positioning yourself for a sell, except this particular place. Although not now. I'm talking of just trying to take your sell. Obviously, we are expecting take profit to be around it because this is a major low. So if for those of us that want to wait for extra confirmation, then wait for this low to be broken. Right, let me switch to wait for this low to be broken because this is the low that broke this high. This is the low that broke this high. So this is a major low. For this low to be broken before you can now head. But me, because I said the lower time frame is what will happen on the higher time frame has already been happening on the lower time frame. So the lower time frame, I'll take the market to write it down. So what is I doing? This is on the 4 hours. So you can see that market is breaking structure. And then if you remember, this to our trading range. I will show you why I choose this place. If you are looking at our trading range, you'll be able to see that market already got into what? Market already got into the premium before selling down, before breaking structure to the upside. So this will now be our new trading range, which is from here to what? To this low that was created here. So our trading range will be from here down to this place here. So we are not buying in what discount, we expect to buy in what in premium. So go down to the 1 hour time frame. So this is the 1 hour time frame. So as you can see, because we've marked out everything we need to do, we know that we are trading between this place and this place, right? So we can just remove this so it'll be easier. So what did I do? I marked out another block right here. You might not see it really clearly, but because sometimes it feels like maybe this one has tapped into it, but most of the time, because I know that all these places are liquidity to be cleared. All these places are liquidity to be cleared. Although liquidity was cleared already, but with the way this move was choppy, if you notice, look at the move, the way it was choppy. Market was as if market was forcing to go down, and the market did not even break this low. Market just came to tap it and then move off. So I'm expecting this high to be broken, maybe something around here, and dimming here, and then start going down, something like that. So what do I do? Let me remove this and this. So I like refining my zones. So I'll go down to the 15 minutes. I like refining my zones. So if you go down to the 15 minutes, you'll see exactly what I'm talking about here. You can see, if you notice, there's a fair value gap inside here. Those of us that trade fair value gap, there's a fair value gap inside here. There's a fair value gap inside here. The market did not tap into before making the move. Look at the fair value gap around here. So there's a fair value gap around here. The market did not tap. For those of us that trade fair value gap, you can see there's a fair value gap the market did not tap. So for this trade, I would want us to enter a sell from basically around here, around here, around here, and then stop loss just above this low. And then for our first target, we'll be targeting here, which is a very good 1:6, because if you put it down here, 1:6, 596. And for my second target, after market breaks this low, then I'll be targeting what? 1:24, which is very, very possible on deriv, on synthetics. Very possible, in fact, averagely normal on deriv. So yeah, this is the trade on volatility 10. And as you can see, the 10-1x I analyzed I think 2-3 days ago, it's already going well, if you notice. So the major low was already broken, but I still continue to sell because I knew that what happened on the lower time frame is what's happening on the higher time frame is a collection of what is happening on the lower time frame. So if you're able to catch the lower time frame move, you'll be able to now set your take profit at what the higher time frame. So I'm also swinging this volatility 10-1s. So that's the same thing I want to be done for volatility 10. I want to also swing this volatility 10 down to this very particular place here. So this is what I'm expecting for this particular trade here. So if you're requesting for the coordinate, this is the coordinate here. So your entry is around 5768.0057. Your profits around 5491.2203. Your stop loss is around 5779.1694.